Hello and welcome back, guys, to the channel. And first of all, I just want to thank you guys for the support that you've shown and given us so far. That and to make sure that you guys are with us, more content will be dropping soon. To make sure that you guys become more profitable that you initially were. So without further ado, guys, let's get into the video. So in this video, I'm mainly gonna be talking about WYCKOFF. Now, WYCKOFF is a very wide concept and a little bit complex than the other concepts that I have initially spoken about. But that being said, this WYCKOFFian theory is going to be presented in some sort of series, right? So I'm going to make a couple of videos in which each one of them I will explain an important concept about WYCKOFF, because WYCKOFF is very wide and I cannot do it in a single video. Now, with that being said, let's get into it, right? So what is WYCKOFF? WYCKOFF is simply a concept that was uh, invented by this guy called Richard Wyckoff. Now, this guy was a stock trader, and being a stock trader like way back in the 19s was a little bit difficult. So he came up with a trading strategy that analyzed the market in such a way that he was able to trade the stocks very efficiently and with I mean in both sides, right? Because if let's say you had a bullish market like this, right? So this guy created Wyckoff in order for him to be able to trade at this side of the market and as well as this side of the market. So he was able to catch the buys as well as the sells, which made him a shit ton profitable. I mean, this is crazy, right? So this guy actually created Wyckoff to be able to spot the footprint of the market, right? Because Wyckoff is simply a tool that shows you the footprint of the market, like where the market is going, where it is, and where it's going, right? Wyckoff is simply a footprint that shows you where the market is and where it's going. Now, how does it do that, right? Wyckoff um, is not a thing that is traded on its own, right? Wyckoff is simply uh, an embedded concept that is aligned with other important things, right? So the first most important thing that is aligned with in Wyckoff is structure, right? You have to have structure in order for Wyckoff to happen, to occur, to be spotted, right? Without structure, you cannot spot Wyckoff. I mean, if you don't have structure, then you just have a plain chart like this, which is you can't see anything in here, right? So once you have that understanding and structure, that is when you can go and trade Wyckoff. Now, Wyckoff in itself is simply a footprint that shows you how market shifts, right? So let's say you have structure being presented to you like this, right? Okay, let's continue. You have structure being presented to you like this. Now all of a sudden you have something like this, right? This right here. Now Wyckoff is simply a footprint that comes to show you how this market shift from bullish to bearish, and how can you trade this thing that is shown you right here. So the market was pushing bullish, right? We had structural highs being broken and new structural highs being put into place. But all of a sudden, we now have what? An SMS, right? This shortened market structure here. Price failing to break the previous high. Lo and behold, price comes to break a low and start breaking what? Lows and lows and lows, meaning that this market was bullish and now has shifted bearish. Now, Wyckoff is simply a tool that shows you how this right here can be traded, right? This shift of market structure. How can shifts of market structure be spotted and traded? That is what Wyckoff is all about. Now, Wyckoff becomes a very complex concept because it occurs everywhere in the charts, right? Because if you have something like this, right, you have a chart like this, um, this simple bullish chart right here, meaning that you have what? Lows and highs, lows and highs. Now, for a low to be created, it means that there was a bullish movement that occurred. So oh, excuse me, I had a call. So let's go back now from this low right here to this high right here. It means that there had to be a bullish move, right, uh, for this high to be created. Now, from this high to this low right here, it means that this bullish move had to change from bullish to bearish in order for price to go bearish to make this low here. And that is what we call wake off. It means that that change from bullish to bearish, right? There is a change here. There is a shift in market structure from bullish to bearish. Now that is wake off. The same thing applies to this low, right? For price to shift from bearish to bullish in order to come and make this high, there had to be a shift of market structure. For price to shift from bullish, from bearish to bullish, that is Wyckoff. And this is exactly why I say that Wyckoff occurs everywhere, and that is what makes it a very complex process. Now, let me take an example from the live chart. This is an introduction video as well. We do not want to keep this very long, so let me just describe what happened here. So this is the gold chart on the 4-hour, and now the same thing that I was presenting above there is what happened here, right? So price made this high and came to make this low. Now, after this low was created, there had to be a bullish move to come to make this high right here. So it means that price had to shift now from bearish to bullish. It means that down here there is Wyckoff, right? Now this high, when this high is formed, it breaks this high, right? That's another evidence. That's now a potential evidence on this specific time frame that there is now a shift of market structure, because price has now shifted from making lower highs and lower lows into higher highs and higher lows. Now, an important concept for you guys to learn is that Wyckoff occurs everywhere in each and in every time frame. Now, you can spot Wyckoff in this specific time frame, but it means that this markup in the lower time frame, there is a lot of Wyckoфfian shifts in here, right? Because after the creation of this high, right? So this is now a sign of strength that this market has now shifted from bearish to bullish. Price. So this bullish move happens, and then what happens next, right? This pullback. Now, in order for this pullback to happen, there has to be a change of market structure from bullish to bearish in order for the bearish move to take place. Now, that shift of bullish to bearish cannot be spotted in this specific time frame. But if you do go to the lower time frame and look at this circled area around here, you will find that there was something like this that happened. So let's take a little bit low. So if you go to lower time frame and look at this area here, you find that there is something like this that happened. Like the market was pushing bullish and shifted now into what? Into bearish, right? So this right here, this shift is exactly what happened inside here in the lower time frames. Now today I'm not going to be talking about that. I'll leave that for the next videos in order for you guys to not be shaken by this concept, right? So why is it not deleting? Okay, so let's do this. Okay, there. So price now comes to make price makes a pullback to this low here. Now this is exactly why I say that you can't trade Wyckoff on its own. Wyckoff is a concept that has to be embedded with other concepts in order for it to work efficiently. Because okay, you now know that price is going bearish because you have spotted the shifts of market structure in here, and now you know that price is going bearish. You have to know that okay, price is going bearish, but where is it going to? And that point is when what? Supply and demand takes place. Now supply and demand is a concept that people take or consider it very lightly, but it's actually a very important concept for you to be able to know where price is actually from and where is it heading in the near future as well as the far future. Now using supply and demand, we do know that Wyckoff that price is going to this hidden demand zone in here, right? Lo and behold, price goes. It means that the minute price reaches here, you start to look for Wyckoff markups to catch that move of the shift of market structure now from bearish to bullish, meaning that this zone will help you to know that, okay, once price reaches here, there's going to be a buy. Lo and behold, you have your what? You have your buy, right? So this is why I said Wyckoff cannot be used alone. It's a concept that has to be embedded with other concepts in order for it to work efficiently. Now, so let's continue, right? So this low comes to be, so this low is finally created, right? And after the creation of this low right here, means that within here there has to be what? Because the creation of a low is like this, right? So inside here, right, so let's say this big circle here, it is this one here, right? So let's reduce this, okay, that and that, right? So this circle here is now this circle here. So we now know that within this circle here, there has to be shifts of market structure in order for this continuation from this low here to this high right here, right? So you know that in the lower time frames, I have to see something like this, right? So price goes bearish, and now what? Breaks structure and start pushing where? Bullish. So this right here is what you're looking for to see in here in the lower time frames, right? So this is how Wyckoff operates. Wyckoff occurs everywhere and in every single time frame. That is what makes it such a complex concept for people to learn. Now, this was just an introductory video, and in the next videos, I'm going to be digging deeper and much deeper into Wyckoff in order to know how it operates, why does it operate like that, and what are the most important concepts for you to be able to mix and use it, or use them with Wyckoff in order for you to be at your most efficient and consistent way. So without further ado, guys, don't forget to like, subscribe if you haven't, turn that bell button for further and in-depth knowledge of this stuff here. You could DM us at Instagram at official Green Pips of X, and we'll be happy to receive you for the mentorship program. And that being said, until the next time, guys.